So now that the reverse is happening and those supply chains are breaking, and we're in a deglobalization phase of commerce, that means that is inflationary. And remember,
It's great to have Lynette Zhang back. Geopolitical risk, deflation, and the impact of globalization intensifying inflation in the United States are the vital topics of today's discussion. Come along as we untangle these complexities and acquire valuable insights into the factors shaping our economic terrain. You won't want to miss this insightful conversation. So let's listen to her again.
now I'll grant you, this is an election year. So the likelihood is that there will at least be an attempt to keep things fairly calm through the elections. But quite honestly, things could easily get out of hand quite quickly. So let me just show you some of the things that they are looking at. I'm looking at more, but we'll take a look at what they're talking about, because they're saying it's a perilous time investing pros on the next big risk. Well, there's probably more than what they're showing us. But these are three Wall Street executives weigh in on the dangers they see ahead for investors. And, frankly, it's even to maintain your standard of living. So first, we're going to look at what Wes Edens has to say, because he sees the biggest risk as geopolitical risk. And we certainly see that all around the world. But the rise of that risk over the last several years and what the real risks would be broadly, because it isn't just a conflict country to country, but it's the impact of that conflict. Who else gets involved in that conflict? Are there proxy wars going on? And how does that impact the public and inflation and the costs and the position? And I mean, we've certainly seen a breakdown in the supply chain. And we've definitely seen in some areas a deglobalization, which is deflationary. We're going to talk more about that in a minute. But 50% of the world's population is going to elect a new leader next year. So it's a particularly charged time. And aren't we seeing that here in the US? But 50% of the world population looking at new leaders. And what if those leaders fail them? I mean, we look at what's happening in South America too. I feel like we're in the big deglobalization trade. Okay. Now, globalization, as corporations went out to, say, China as an example, lowered their cost bases. And when the Chinese yuan was then pegged to the US dollar, which means it went in lockstep with it. So if the dollar went up, so did the yuan. If the dollar went down, so did the yuan. Corporations could easily determine what their profit margins were going to be. Now, the cost was steep. That's another conversation for another day. But that's what made it look to the public like that the prices on things were going down, because here were all these products that we were importing from China. And I can remember being so surprised at the prices and even in some cases, the quality level of what we were seeing. So now that the reverse is happening and those supply chains are breaking and we're in a deglobalization phase of commerce, that means that is inflationary. And remember, it makes it really easy, and I might be redundant on this, but there's only one way to fight inflation, and that's with deflation. So that's what we've been doing for the past 40, 50 years. And there's only one way to fight deflation, and that's with inflation. And that's one of the reasons why I'm telling you that, in my opinion, and according to the monetary velocity and some other things I'm looking at, I believe that we are at the beginning phases of the hyperinflation, regardless of what they blah, blah, blah say. But everyone seems to think all these regional conflicts, this is key, all these regional conflicts, whether it's Israel, Hamas, or China and Taiwan, Russia, Ukraine, are going to be contained. So they're just going to stay in those little areas. Globalization is deflationary, deglobalization is inflationary, and the first global deflation has begun, and it's unclear just how painful it will be. Well, frankly, I think a hyperinflationary depression will be extremely painful for most people, but you can protect yourself. The strategy that I developed, and I've been studying currency life cycles since 1987, is based on those repeatable patterns. Your wealth and your ability to barter is protected with these two assets because it has global functionality. So it's critical. You can decide right now how painful you want this transition to be for yourself and your family. You can also decide right now, because wealth never disappears, it just shifts location. So you can decide right this moment to have yourself in a position to have the wealth transfer your way. And you do that by holding your purchasing power. And you do that by positioning into a severely undervalued asset, because this is going to flip-flop. And what's severely overvalued now and what's severely undervalued now, gold, silver, severely undervalued. Everything else severely overvalued. That flip-flops. So if you were in the right place at the right time with the right asset, you can have that wealth shift your way. But a lot of people, they'll ask me the difference between deglobalization and globalization, the difference between inflation and deflation. They're the same coin. They're just the opposite sides of that. And deglobalization makes U.S. inflation worse because all of those cheap salaries and those cheap materials with the dollar stronger against other currencies, which, we hear about and blah, 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 that all goes away with deglobalization. Then you got to bring it here. So go back to 1971 when Nixon said, if you buy American, that inflation won't bother you or impact you at all. But we exported our manufacturing base. We exported our intellectual property. So now we have to deal with the consequences of those choices. And that is highly inflationary because we've got to build the supply chains back here. And what's been happening with salaries with those unions, they've been going up. And we are also in an inflationary environment, which means that the goods cost more too. I hope you're ready for it. I seriously do. Because the only way to fight deflation is with inflation. It's the only way to do it. It's not like you got 1,000 choices. And with the impact of the monetary velocity, the number of times that money changes hands, it peaked in 97. That was the last time that taking on additional debt was actually stimulating throughout the economy. It's been dropping much like a stone since then, up until recently. And if you've been following me for a while, I've told you I'm paying a lot of attention to the monetary velocity, the number of times that money changes hands chart. And when we see it start to rise in a pervasive way, that's the beginning of the hyperinflation. And frankly, I've shown you that just recently. That's what's happening.
Thank you for joining us on this journey through the complexities of geopolitical risk, deflation, and the nuances of globalization's influence on USA inflation. We hope you found these insights valuable and thought-provoking. Stay tuned for more discussions on the ever-evolving economic landscape. We are signing off until the next video. Remember, knowledge is power, and understanding these dynamics is key to navigating our financial future. Take care, and see you tomorrow.